Hi guys, and welcome back to Marketing the Madness, where you're dialing in to some of our special episodes where we were recording live on stage at Marketing the Madness Live at the Drum back in October. And I have got another corker of an episode for you. So without further ado, let's go and meet our next guest.
Hi everyone, I'm Sarah. My background actually was a banker. I worked at UBS and leveraged finance, so I started out as you'll see from my presentation, I love data and I love numbers. And then I started a business where you could text a question and we'd text you back the answer before the iPhone came out. I am 50. And then we sold that to the guys that own the 118 brands, and then went out to New York for a bit, came back and then started a business called Recipe way before its time. It was doing predictive AI, personalized styling a decade ago. And then sold Recipe to a company called Map, who are an amazing marketing automation platform. And I've spent my whole last decade, if you like, really trying to work out how to help fashion retailers grow and how to remove the inefficiencies. I love the data and I love understanding how to do that. So I thought what I'd do today, I'm going to go through it pretty quickly, but there is a report that we've put together, which you can go onto our website and download if you want to. So the first thing is just to give you an idea. So fashion is going through a really tough time. And I think we're seeing this in quite a few retail categories, but particularly in fashion, there is so much volatility. There's consumer confidence issues. There's volatility in terms of stock market and in terms everywhere. So understanding that there is a growth problem. So at the moment with fashion retail, we are selling the same first-hand volume in 2028 that we sold in 2019. So there is very little. So there's a volume stagnation issue. So that's one issue. And then you've also got pressure on the bottom line as well. So you've got a massive margin, you've got costs going up, and then you've got all of the growth in the market coming from, there's no more volume growth, so it's all coming from price. So it's a kind of perfect storm. So you're now in a market where it's no longer about volume growth and share. It's a share gain market. So you've got all of these retailers having to compete very much for that share gain. And so what I wanted to do was to understand, I've got 113 of the most successful quoted fashion stocks, and looking at their data over the last 6 years to identify what those key operating models are for success. And it's really interesting what comes out of it. But all the things that we've talked about today are echoed in the data, which is really reassuring to see. So all the things about brand is so important. You've got to get out of the middle, all of these pieces. But I'll go through it for you. So first kind of structural change, and I'll show you this in the data as well, like resale. So the only growth in volume that is happening in fashion in the UK is coming from resale. So 1 in 4 products now are secondhand, which is a phenomenal stat, right? So, I mean, I'll show you the quoted stocks growing as well, but it's not about sustainability. Unfortunately, I always thought it should be, but actually it's all around value for money and perception. It's about that treasure hunt. So really understanding what's driving that growth. And this is a kind of emerging trend. And actually very few retailers are playing in this space, but I think they really have to think about how they do that. And then this is interesting as well. So obviously, 15 years ago, 80% of marketing budget was spent on brand marketing, only 20% on paid marketing. It's now flipped the other way. It's now 80% on performance marketing. And obviously that makes sense because there's an ROI there and it makes sense and it feels right. But it is commoditizing the brand. So you've got this massive brand issue. So it's really putting that brand power back in and understanding how you do that. And that also comes out in this one here. So if you look at any geography and you look at, this is a kind of standard price and perception, you find that there's this really crowded middle ground. And the key thing here is you've got to, if it's so crowded, and if you're in a share gain market, you have got to be different enough that if you went away tomorrow, someone, your community, your fans, whatever you want to call them, they can actually, I miss them. What is it about that brand? If they went away tomorrow, I would really give a shit. So that's the key thing. So how do Zara's done a great job. It's price, it's quality, it's the fashionability. Uniqlo is around the technicality of the fabric. So understanding how do you as a brand take yourself out of that middle ground. So, and then you've got omnichannel, obviously is here to stay. So that growth of online has now plateaued 45%. And so actually what you're now seeing is actually there is a massively symbiotic relationship between those stores and online. And typically now when you close a store, you see 15% of your revenue in that area decline as well. So understanding how you play and work with stores is key. And then you've got these new players like Shein and Temu. I'm going to go through this in more detail in a minute, but they've completely changed the game. And even though we love to hate them, there are certain things they do with their data, with their community, with the way that they build their supply chain, the way that they've really started to change the way we use data, to change the model, which is, I think, something we all need to take note of and think very carefully about. So those are kind of structural changes that we're starting to see. And then if I look at the research that we did. So we took 113 quoted fashion stocks across the UK, US and Europe. So that's some of the top names that you've got, luxury, Hermes, Prada, high street, you've got Inditex, Next, H&M, Adidas. So all the big names that you would have heard of. I'll get a bit, okay, I won't bore you with this, but anyway, what I wanted to do is not just look at sales growth and margin growth, but I wanted to look at the health of the business. So we looked at free cash flow, we looked at cash conversion, and all these things that tell you've got a really good, solid business that's churning out cash and that's really looking after the long term. Yeah, I told you I'm a bit geeky with my data, so apologies. But anyway, but of that 113 businesses, what's interesting is obviously revenue grew, but a lot of them were taking up and picking up the slack from those businesses that went under over COVID. Gross margin did increase, but everything else is looking pretty ropey. So you've got it's a 3 percentage point decline in gross margin. You've gone from 1 in 10, so 10% having a negative net margin to 20%. So you've gone from 1 in 10 to 1 in 5. That's pretty stark. And then the cash conversion. So with fashion retail, it's all about how quickly you can turn your stock. And that is increasing by 3 days. And then the debt, the leverage has gone up as well. So it's not a pretty picture. And when you then take it down, so you can see the key winners here, luxury and sportswear over that period. But actually what we've seen with the H1 interim 6-month data is that is starting to look very different. And actually now you see some issues in luxury as well. But I can share these. Please feel free to take these slides afterwards. But you're seeing the mass market is seeing some growth. It's very much a case-by-case basis. Department stores, you're seeing some margin recovery, but definitely revenues declining. And the biggest issue is around the cash conversion. So these are the top 10. So Hermes, amazing, Buckle. I'll go through this in a bit more detail. Sorry. So the key findings that are interesting. So if you look at so I took the consumer index and then the discretionary consumer index, which should be quite aligned to fashion. And fashion it underperforms by such a massive margin. But actually, when you then look at the top 25%, and the bottom 25%, you've got a 60% margin. You've got a 6% difference between the top 25 and the bottom 25. And that displacement tells you that there's a massive operational issue. So then what I wanted to do was to understand what is causing that issue, what is causing that operational inefficiency. So the first thing I look at, which is I think super interesting, so it's all around, so those retailers that could really take control of their operational components. So the top 10%, if you look, their EBIT margin over the last 6 years has increased by 19.5%. Free cash flow, 19%. Working capital days, they're turning their cash 13 days. That's half a month faster, which is phenomenal. And they're leveraging a lot less. So there's something in that cash cycle beats channel mix. And so if you then plot, so you want to be up in that top left-hand corner. So if you plot EBIT margin to change in working capital days, so you want your working capital days to be negative, and you want obviously your profit margin to be positive. And if you look at how they grow, you can see the ones down here in the bottom right-hand corner not doing so well, the ones up there. So it's very interesting to see how that plays out. There's an interactive report as well, so you can go in and see all the numbers. So that was the kind of key outtake. But then I thought it was worth highlighting some of the things that I hadn't, didn't know did us that well, but they have had a phenomenal time. So as a retailer, they're a department store in America, and they've just put absolute focus on their operational efficiency. So how they manage their inventory the discipline is phenomenal. So not only so everything in their working capital days, it's a whole month. That is just free cash flowing through the business, allowing them to invest in more stuff, less waste. And they spend a lot of time really looking at a smaller better edit, so less substitution, and really looking at how they build exclusivity around those private labels, which actually lifts the gross margin. So I think there's lots of learnings in some of these key performers. And then Deckers, which I love, they've done, again, an amazing job. And they've got these icons. They do a really good job of how they release it. So it's not about constant newness. It's about really understanding how you do launches that are meaningful at the right time. And they've got these dual lane supply chains so that it's just a very smart way of operationalizing and creating efficiency the whole way down the business. And then TJX, just amazing margins for a value retailer. And they've got 2,000 buyers who go through a 2-year buying merchandising academy. They build the short cash cycle into their business and the store experience and how they release things. It's just an amazing business. Again, I've got detailed case studies. I don't want them on all of these. But then what was really interesting is the luxury, even though it was doing really well up to 2024, actually, if you add in the 2025 H1 interims, they've got the same dangerous middle. So you've got the ones who are performing, the scarcity houses, who really understand that scarcity and the luxury and how you launch products in the right way and how you have those hero products versus those that are trying to go too broad, who are now starting to see the cracks in their numbers. And then this is amazing. So 4 retailers in luxury out of 25 are responsible for 70% of the EBIT. Phenomenal. So really understanding what's driving. They're all big businesses. They're all, but multi-billion-dollar businesses. So I think that's phenomenal. Amazing. So then secondhand, I'll be really quick. Secondhand is growing really, really. It's the fastest growth, still small, but so vintage, it's 813 million of revenue, not gross merchandise value, of revenue. Yeah, that is phenomenal. And it's got a 10% EBIT margin. That's in this resale. And because people end up, I don't know who sells on Vinted here, but anyone who sells here on Vinted, right? How much do you then go and rebuy from your budget? How much do you then? Yeah, so I do for my kids, right? So it's this wealth creator. You're creating wealth out of your home, and then you're actually recycling that cash and keeping it liquid in the business. So both ThreadUp and The RealReal were loss-making. They're both profitable now as of last quarter. So I think it's something which we really have to think very carefully about. You can read this. But there's just something here which I think all brands need to start to think about, particularly in the fashion space. And then the last thing with Shein, because I know we all hate them for lots of reasons, but I think there's lots of things that we have to really take note of. Their growth has been so phenomenal, and they've just got data, and I obviously am a massive data keeper. Good quality data used well the whole way through the business makes such a huge difference. So everything from the way they design it to the way they create the data act as a digital first product all the way through to how they use it. And even when they're selling it, well, in trade, they are changing and adapting the product data to make sure that it is on trend. All those micro trends are kept and restored and allocated to the business. So I think that is interesting. And then the supply chain is so many learnings there. How do you, the short cycle, how do you make sure you've got enough supplies where you can do the short? I think the whole supply chain is going through a massive transformation. What you do nearshore, what you do farshore, how you actually reallocate your spend to make sure that you can do those different buys. And then the way that their marketing system works. Anyway, so there you go. Very quick whistle-stop tour. But you can go onto my LinkedIn and you can download the report. And it's, but hopefully some insights there. But what we're trying to figure out is there are some key operating models that I think do work, and these businesses are really thriving. And I think really understanding in this day and age how you put the brand back in, how you put the human back into that. And data and AI is not a panacea. It can help with a lot of productivity, but I think understanding how that creativity needs to come to the fore, particularly in something like fashion. There you go. Okay.
So I hope you loved that episode just as much as I did. Honestly, there has been so much gold content from Marketing in the Madness Live, and you are not going to want to miss out. So if you haven't already, wherever you're listening, please make sure you subscribe. And if you want to join us live at the next event, which is coming up in March 2026, go and connect with me on LinkedIn, Katie Street, and make sure you follow the Marketing in the Madness Live page, and I will make sure that you get one of our VIP invites.